YouTube channel. So if you feel like the Zoom is disturbing you, please log into the YouTube channel, Crypto Pioneers 256. We are streaming live. We are streaming live onto the YouTube channel, Crypto Pioneers 256. Please go and view as we are there. Okay. If you see that the network on Zoom is not good, I know when the market changes the trend, most people don't even attend class because they are in floating loss. And I told you, get one coin, get only one coin. For example, come here, come here. And when you come here, tap into your beloved coin. For example, this one. Make analysis on this coin. Take it in 1 day. Take it in 1 month. You can even trade one coin. Because the market, when the market falls down, all the coins go down. When the market goes up, all the coins go up. If Solana breaks this area here, what will happen next? Now, some people haven't seen that even Ethereum has made its all-time high. They haven't seen. Some people are not seeing that Ethereum is about to break its previous high. Some people have not seen this. Why? Their minds are distracted. You see, the minds are distracted. You have been waiting for a bull run for quite a long time. You've been waiting for a bull run for quite long. You have waited for 5 months. You have waited for 3 years. Some of us, we have waited for 4 years, waiting for the bull run. You entered the market in the bear season. You have been waiting for a bull run for all this time. Now the coins are making their all-time highs. For you are distracting your mind. You are distracting your mind. You are distracting your mind. Some people are not aware that Ethereum right now is kicking the bucket, is kicking the all-time high. And some people don't know that the floating loss they're in right now, it has just been a retracement for you to buy the dip. Now it is at 4,500. 4,500, there it is. You understand? But are you seeing the chart? This is the chart of Ethereum. Since its existence, this is the chart. It is not so much big. There it is. Those are the months. And when you take it to the weeks, this is how the chart looks like. The weekly high, the weekly low, the demand zone, you can see. This is the chart. You understand? That is the chart. So, this bull market is full of distractions. People are going to distract you. People are going to distract you. But you stay focused. Stay focused. Nothing is better than trading. Trading is the best opportunity where you can sit in your home and you pay out yourself. You don't need anybody to pay you when you're trading. That's why even if the market does what, I do what it takes to understand its moves. Whether it is good, whether it is bad, I do what it takes to understand the market directions. Reason being, I know very well that come rain, come shine, come rain, come shine, the market will give us money. Whether it's going up, whether it's going down, we shall get money. You just need to understand the art and how to play the art. Don't be taken away because of a scam. This is a golden opportunity. When you see Ethereum hitting $15,000, I'm waiting for my Solana to hit $300. Okay, and it is possible. And it is possible. Now, when we are trading, we look at the market cycle. You look at the what? The market cycle. When you're trading, you look at the market cycle. When you look at the market cycle, you will see that money flows fast in BTC. And when money goes out of BTC, it goes into Ethereum. It's the sister. Okay? It goes into the sister Ethereum. And these ones are called big market caps. Big market caps. Big coin is like it's Solana. You will see them lowering. Then from the big market caps, money will flow to the mid caps. Money will flow in the mid caps. When you talk about mid caps, medium coins, XLM, HBAR, HBAR, LTC. Hey, you will see those coins pumping. Look at Link, smaller market, medium market caps. Then you have the smaller market caps. Smaller market caps. Now, nobody's going to tell you that now you have recently been seeing Ethereum lowering, and it is the queen of this bull market. It has nailed it. You understand? Then when money moves from BTC, it comes to Ethereum. From Ethereum into the medium caps. From the medium caps into the smaller market caps. Okay? When talk about big market caps, 100 billion market cap, big market caps. Medium caps, 100 to 50. 100 to 50 billion. When it comes here, we go below 50. We go below 50 by market cap. If you don't understand what market cap is it is in full market capitalization. The amount of money a cryptocurrency is holding as per time. Okay? The total amount of money invested in a certain cryptocurrency is what we call, or in a certain asset is what we call the what? The market cap. So that is it. So when you look at Ethereum, it has just made a retracement. Ethereum has just made a what? A retracement like this. And this is just a retracement. It is just a mere retracement. However, if it goes ahead and break below this area, you shall see it changing character to the downward side. Market will have changed the trend. But we expect Ethereum to hit $5,000. We expect Solana to hit $300. It means even if you are in floating loss in Solana, Solana has given us a discount. You can see price at 186%. $186. That is a discount. Solana has given us opportunity to buy it at a cheaper price. And those people that I showed you that when I was trading Solana, my take profit was at $205. Hope my take profit was hit. Okay. And my entry was around here. I just took this I just wanted a break of structure, but I just entered here on this stronger candle. And I took profit at 205, which is a 12%. Which is a 12%. Now, I'm trading Solana, and Solana is moving up. There is a big fair value gap around here. All of those we shall look at. We shall look at all of those when time comes. So there is a fair value gap here, and that's why you see it tipped there and it bounced back. You understand? Now, get your 3 coins. Get your 5 coins. This first class you see here, these are my coins. These are my coins that I follow. And after getting these coins, please go and do analysis. These are the coins you should be doing analysis on. Okay? These are coins you should be doing analysis on. They will always help you to see how to track their movements. Okay? Now, are you seeing this immutable X here? It made this pattern. After, it came back around here, but it didn't retest the demand zone, broke the structure, and it continued the upward side. Okay? If it keeps above this break of structure, it will be bullish. Unless it breaks it to the downward side, I will confirm a change in the trend, a trend change, and it will be going down. In today's lesson, we are going to look at support and resistance. Okay, support and what? Resistance. So you have seen that the market is going down, and I've seen some news. Okay, I've seen some news that the Fed is not willing to cut the interest rates. The Fed not being able to cut the interest rates, cutting the interest rates. So if they fail to cut the interest rates, 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 cutting the interest rates could give more confidence to the buyers or to the investors to invest more money in the market. And I always tell you that the crypto space is always affected by news. If the news is positive, the market will go bullish. And if the news is negative, the market will go down, the downward side. Now, when they cut the interest rates, the interest rates, for example, you buy a lot of, you borrow a lot of money from the bank, and you will pay less rates. When you pay rates, it means it's gonna give you confidence to buy more, or it is gonna give you confidence. It is gonna give you confidence to borrow more. And when you borrow more, you will be able to invest in your business and even invest in the volatile assets like a crypto. Okay? But when the interest rates are not cut, this one always discourages the investors from investing in the crypto space. You understand? And by so doing, they lead to such what you are seeing right now. They lead to the red you are seeing here. It leads to the red you are seeing here. You understand? But all in all, you should be knowing what to do next. Now, when you look at this coin, Link, I've been following Link for a long time, and this was my entry. I'm holding it tight. However, if price breaks below this area, I will take profit and I will close this trade. Okay? Because I think if it is to retrace, it had a fair value gap here to stop around here. Now, we are going to look at the support and resistance. And with the support and resistance, we are going to look at entry and exit points. We are going to look at entry and exit points. All right. The entry and exit points you are looking at, they are going to be according to the candlesticks that we learned earlier. Hope everyone remembers the candlesticks we looked at. Okay? The candlesticks we looked at, and we are going to look at support and resistance, how to trade the support and resistance with the chart patterns in key areas. As simple as that. Let me take one example of a coin. Let me say, tap on it. Tap on say. And we are going to look at to use a bigger time frame of, we are going to look at a bigger time frame of 4 hours. Okay. The meeting is streaming live onto the YouTube channel. Please go there. If your network is not clear, and those people that have not attended the classroom, make sure they visit it there. All right. Now, when you look at stay USDT, this is our area. This is the range we are going to use from the high to the low. This is the range. This is our high, and this is our low. So in this case, this one is a swing low. This one is a swing low, and this one is a swing high, because we are in the 4 hours. So this is a swing high, and this one is a swing low. We can draw them using the trend line. Sorry, yes. You can draw them using the horizontal ray. Come and get your horizontal ray. Place it at the top here. Tap on the screen once. Tap on it until disappear. Double tap on it and say swing high. That is the swing high. That is the swing high. So tap on it and say, this is the swing high. This is the swing high. Simple like that. Say okay. Come here and it say, tap on this one and say, this is the swing low. Tap on it like this. And say, remove it, double tap on the line and say, this is our swing low. This is the swing low. And say, okay. So this is our area of interest, the swing high and the swing low. Having identified those, we can go ahead and look at where, when price was going downwards and when price was going upwards. So look at price here. This is what is happening. When you look at price here, so when you look at the chart here, we want to draw our support and resistance areas. Okay. Now you will find out that this swing high is a support level. Okay. It supported the market around, the market was supported. And the swing low is also, sorry, this one was a resistance. Swing high is a resistance. Market was resisted at this point here. Market was resisted here. Sorry. Market was resisted here and it was supported here. So the low is the support. The low is the support and the high is the resistance. The low is the support and the high is the resistance. Right? We'll move on. Now, as price was going downwards, it was resisted at some areas. When market tried to come here, it made an inverted D around this point. When price comes here, it made an inverted V, an inverted V, an inverted V, an inverted V. So the inverted V that was made, they are called minor resistances. Minor resistance. Minor resistance. And when the price was going up, it made V's like this, and here it will make another one. And this one is called B, minor support levels. Minor support levels. Minor support levels. Now, we can draw lines on such areas. We can draw lines on such areas to form minor support and resistance areas. You understand? Minor support and resistance areas. Now, can get my line? When you look at the chart, around this point and around this point, market was resisted. So I can bring a line. I can bring a horizontal line. I can bring a horizontal line like this. I bring a horizontal line. Or I can bring a horizontal ray like this one. I tap on the area here. Market was resisted there. I come also here down. Market was resisted at the same area here. I come here. I tap here. I always use the body. Market was resisted. I come here. Market was resisted. I come around this here. Market is resisted around there. So what I've done, they are minor resistance areas. Minor resistance areas. As market was trying to go down, market was resisted from going up. Market was resisted from going up. So market started here, started trending up like this. When it reached around here, it was resisted. It comes here. It made another lower high. Yes. It made another lower high, resisted again. Made another lower high, resisted again. So price kept on making lower highs. Okay. Now, when you look at here, these are resistant. The ones that I've marked, they are resistance areas. Market was resisted around that area. Okay. In the same way, market was resisted around that area. So those are resistance areas. Market was resisted from going up. Okay. Now, you will find that in the same scenario, when market changed the trend, market was resisted from continuing the downward side. And see market started here, even here it made another one, even here, even here. So this one, market was supported around this area. So these are minor support levels. I can change the color. I can change the color and I say, let me take the horizontal ray. Let me take the horizontal ray. I draw it here, down. I draw it here, down here. I change the color. I can change the color and let it be black. You understand? And change the pixel to 1 pixel. You understand? So these are major, these are minor support levels. Market has been supported around there. Minor support levels. Okay? I don't know whether you have understood the difference between the support and resistance. So those are minor support levels. The blue ones you are seeing, they are minor resistance levels. And the black ones you are seeing, they are minor resistance levels, minor support levels. Most of the time, for me, I have used the horizontal ray, okay? Most of the time, we use the horizontal line such that it goes throughout the chart. I just wanted this to use this to be neat. Let me change this to pixel 1. Change this to pixel 1 also. Sorry. Change this to pixel 1. Change this also to pixel 1. Change this to pixel 1. I want my chart to be neat. Tap on, sorry, what's wrong here? Tap on this, change it to pixel 1. 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 Tap on also this, change it to pixel, this one, change it to pixel 1. Also this, I change it to pixel 1. So you see that the chart is neater. The chart is neat. What do I want to show you? That these are minor resistance areas and minor support areas. Most of the time when I'm trading, I will put like this, okay? Now, when you are seeing that, the chart is like this. Price came within this area. Price came within this area. It was respected this area. It moved downwards, respected the area, continued the downward side. It respected the same area, moved down, respected the same area, moved down, respected the area, moved down, respected the area, moved down. So the overall trend was a downy trend. The overall trend was a downy trend. And price kept on making lower highs and lower lows. Lower high, you can see here, lower high, lower high, lower low, 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 lower high, lower low. You see low. This was the low. Okay, so here you see that market comes and changes now, changes the trend. Instead of going downwards, it started moving upwards like this. And since the overall trend is an uptrend, overall trend is an uptrend, so price will change, and now it will start making higher highs and higher lows. Higher high, higher high, higher low, higher high, higher low, higher high. We expect price to make a higher low, and it continues to make a higher high this time. You understand? So right now, the market is just retracing to make a higher low, and after it will make another high, which is higher than this. So those are the two major trends of the market. Another is the ranging market. You looked at it earlier. Okay. So during this, you can see that price was resisted as it was going down, and it was supported as it was going up. Now, naming your support and naming your support and resistance levels, you will see that price will always respect it. Now, price is coming nearer. Price right now is coming nearer to this zone here. Are you seeing this blue line here? And the blue line, are you seeing those lines, or they are very small? Are you seeing the lines, or they are very small? Only that I wanted to be neat. So I expect this market to come and tap into this area and retraces upwards, right? There is a minor support level. Previously, market was supported there. Okay. Previously, market was resisted around this area. It was resisted, not supported. It was resisted. This was a resistance. Okay. Price was resisted around here. So it is another area. Price may be supported around this area and it continued to the upward side. Now, we also, remember, we drew the support and resistance. Those are support and resistance areas. Okay. Now, during the bigger time frame, you will see that now if this is our support here, and even here there is a support, even here price was supported, we can go ahead and we say no. Let's look and find the demand zone. Okay. Let's look and find what the demand zone. So I can tap here, and we said when you are drawing a demand zone, you look at this area. Sorry, you are looking at the demand zone. You look at the demand here down and look for a small candle being followed by a big volume candle. Okay, most of the time it is red, and most of the time when they are together like this, you can take this one, the big one. Okay, so you can take this big one like this and make sure price encloses it like this. Okay, make sure price encloses it like this. Price encloses it like this. You understand? Price goes through like this. Price goes through like this. Sorry. This pen is in a range. Let me put it aside. This pen is in a range. I can tap on it like this. I can double tap on it like this, and I extend. I don't want it there. I just add this file and I extend it to the right. Okay. Extend to the right, and I tap on here and I say demand zone. Demand zone. And I say, okay, that's my demand zone. And the word may not be seen, but when you elaborate it, you can see it here, the demand zone. So you find out if this is the demand zone in the 4 hours, price is respecting it. So price hasn't tapped into it, but you see that it tried to come near there. And there is also another demand zone around this area. Okay. There's also another demand zone around this area. So when you try to do it also, you'll see that price may respect it in the later days. Tap on it, tap the demand zone like that. And when it goes like this, that's also a demand zone. So you can tap on it like this and you set demand zone. Tap on it and you say also demand zone. So demand zone can be 1, can be 2, can be very many. So that is also demand zone. So when you tap in the early days, you will see that price has come back and retested the demand zone. Most of the time, especially if you are used to taking longer term trades, when you see this happening, that price came, made a demand zone like this, rallied up, then it comes back and sits into the demand zone, please, around this point, you will prepare to take an entry. Okay, you prepare to take an entry, and your entry will be you looking at keen, giving a keen eye like this, and you will find out that this is a key level. Okay, a demand zone is always a key level. A demand zone is always a key level, and at this key level, when you look at here, when you look at the key level, there is a price pattern. There is a pattern. There is a price pattern. This one that looked at, somebody to give us the name of the pattern. That pattern could really tell you to go into the market and make your entry. The pattern you are seeing there could tell you to go into the market and make an entry. Can somebody give us the name of the pattern? There it is. Can somebody give us the name of the pattern? And there it looks like. Let somebody write the name of the pattern. Let somebody write the name of the pattern. What is the name of the pattern? Answers in the chat. the bullish harami. Thank you very much. Bullish inside bar. So the bullish inside bar, we said these price action patterns, they are the price action patterns you see. They are visible. All the price action patterns you see, they make sense if they are formed in the key levels. So our demand zone is a key level, and you see that price is respecting the area and forming a bullish harami or a bullish inside bar. Bullish inside bar. Forming a bullish inside bar. And if it forms a bullish inside bar, it indicates market reversal to the upward side. Market reversal to the upward side. Okay, let's go ahead to the upper side, and we also draw our resistance. Let's go to the upper side and find our resistance area. Let's find the resistance around there. Let's find the resistance around here. And this is let this be our resistance level. Tap on the pencil, bring the rectangle, and cross this area, and cross the what? That candle. Then cross that candle, let it go through. Tap on it like this and say supply zone. Tap on it like this and say supply zone. And I told you, please make analysis and send in the chats, and we shall correct you, or we shall tell you that that is not supposed to be like that. Okay, don't do it like that, do it like this. So tap on there, tap on here, make it red, meaning danger. Tap on OK, and it will appear like that. Okay, that is the supply zone, that's the demand zone. So whenever price comes near the supply zone, I will look for sales unless the supply zone is broken. Whenever price comes near the demand zone, I will look for sale. I will look for buys unless the demand zone is broken and the trend continues to the downward side. You understand? So you want to see that price has come near the supply zone and it has made a retracement. Okay, and when you look at this trend, price is still respecting that trend. Low, high, low, high, low, high, low. We expect the market to remain around there and make an upward move. Breaks through the supply zone and makes it bullish this way. If price comes, if this price you see here comes and crosses below this area, market will have changed the direction from going upwards to going downwards. Okay, if this price comes, bypasses there instead of making it there, because when you look at here, this is the low, this is the low, this is a higher high, this is a higher low, this is a higher high, this is a higher low, this is a higher high. We expect price to make a higher low and come here and make another higher high, and we continue with the trend. But if it doesn't make this, it comes here, instead of making another higher high, it comes, breaks through this one, and it continues here. We shall have confirmed that now the market has changed the trend from going upwards. Now the market is going downwards. You understand? Because we shall have changed the trend from higher high to higher low, to lower low. Yeah, are you getting me? The change will have changed. The trend will have changed. Now, what is the importance of you coming into the chart, identifying the swing high and the swing low, the supply and the demand zone, the resistance, minor resistances, and minor support levels? What is the importance? This one, now, like what I have done on say, I'm going to leave my analysis there. Okay, I'm going to leave my analysis there. I'm going to leave my analysis here, the way you are seeing it. Now, I expect price to come, respect this area, and move up. Or you see this one block structure. This block structure. It broke this structure and continued the upward move. I can easily, sorry, what was it was saying? Here it is. Yes. I can come here, tap on this, and use the Fibonacci retracement tool. Tap on the area below here, and I tap it the upward side like that. Tap there, and I remove it. Okay. Now, I expect the price to reverse at the 61. Now, this one is a tool. I will teach it as a lesson. It can also help me to trade. It can help me to trade. I press it like that, and these ones you see, they are possible areas of reversal. Possible areas of reversal. Market can reverse. Market can reverse. Market can reverse from the 23 area. Market can reverse from the 38. Market can reverse at the 50 area. Market can reverse at the 61.8. Market can reverse at the 78.60. Market can reverse at the 100% line. Market can come and reverse around 127. Most of the time, when I see the trend going beyond this, I stop following it. For example, when this say coin comes and bypasses this area and goes this one, I don't wait for any retracement. I just wait it to come to the demand zone. You understand? Because by coming here, it will have come back to my demand zone here. And I will wait for an entry at the upward side. But when it is still around this area where it is right now, I expect price to make a bounce back. Most of the time, I can get my rectangle. To help me bin it, I can bring my rectangle like this, and I draw it around this area. That's 61. Reason being, it has already bypassed the 50 area. So I draw that like that, and after drawing it like that, I can remove this that I drew. I can remove this. So, meaning that what I have drawn, the line you are seeing in the middle within the rectangle I've drawn, that is the 61.8. It is my probable area of reversal. It is my probable area of market reversal to the upward side. Now, let me try to extend it here like this. Hope it is in the right place. Now, let me take it the 1 hour and find out what's happening in 1 hour. Are you seeing it in 1 hour? I expect the price to make a bounce back. Even in the 1 hour, right now, what you are seeing here, there was a pattern around here that was formed. There was a pattern that was formed here that led the upward move, okay? Besides that, there was a demand zone. There was a demand zone like this. On this small candle here, tap it like this. And this is the demand zone, okay? You can make it more darker or lighter like that, okay? You can see that in 1 hour, that was a demand zone. So how can I stack high probability? Now, I will wait for a confirmation. If it has been a retracement, I think price can retrace at that time, at that side, and comes back. But I'm not sure. But I've seen there is a demand zone in the 1 hour. At the same time, there was a fair value gap. The demand zone in 1 hour is matching with the fair value gap of 4 hours. I don't know whether you remember. Take now your chart. Take now your chart in the what? In the 15 minutes. Take your chart in the 15 minutes. See what is happening there. Okay? See what is happening there. As you look and see what is happening there, there is a very good candle that formed. There is a very good candle that formed. Are you seeing this candle here? Are you seeing it? However, I have not get a confirmation. I haven't got a confirmation. I haven't got a confirmation, but there is that long-legged thing that you see there. Are you seeing it? And this time round, it is not a doji, but somebody can give us a what? Can give us a name for that candlestick? Can somebody name the candlestick, that candlestick in green? Somebody to give us its name. Can somebody give us the name? Can somebody give us the name? Somebody to name out, somebody to utter out the name. Somebody to utter out the name of that candlestick with a long leg. That candlestick which is bigger. Can somebody give us the name? Can somebody give us the name? This is the candlestick we are talking about. Are you seeing the candlestick here? Are you seeing the candlestick here? However, you can look at this. Somebody to give us the name. Pin bar hammer. Thank you very much. Both answers are correct, because a bullish pin bar is a hammer. Thank you very much. It is a hammer. So a hammer is there. Remember where we went from. We started by looking at this coin in a bigger time frame. But according to what I see in the 15 minutes time frame, I will wait for the confirmation. Okay? I will wait for the confirmation. If price doesn't confirm to go up, I will not go. Let me go in the 15 minutes and see what 5 minutes and see what is happening there. So price was respected. You can see the same pin bar being made, and you see what is happening to price. All right, and you see what is happening to price. So I can even wait for price to go out of this zone. Okay, I can wait for price to make stronger bullish candles and go out of this zone, because within this zone there is noise. Within this zone there is noise. But I've made some confirmations. Let me wait for price to come out of this, and I will make my entry. And we continue with the rallying trend, which is the upward trend. If you have any question, give me the question. If you have any question, give me the question, and we go ahead, because there is something we want to talk about. If you have any question, forward the question according to what we have seen. And now I want to go ahead. Somebody to give us, so I trade in 5 minutes. In 5 minutes, you don't try in the 5 minutes. Now, some people have just come to class. I told you, we looked at this coin in 4 hours. Did you see us looking at this coin in 4 hours? Were you here? Were you here when we draw the supply and the demand zone? Were you here when we draw the resistance areas and the support levels? Were you here when we identified? Were you here when we identified, when we took this coin in the, were you here when we took this coin in the 1 hour time frame? Were you here when we saw this coin in the 1 hour time frame and in the 1 hour time frame, and we came up with the demand zone, this demand zone here? Were you there when we labeled the fair value? Was it a fair value gap? Were you here when we named this area and we said this area is a 61.8 with the Fibonacci? Were you here? So it has been a long journey. If you did not watch from the beginning, please, the lesson is streaming live onto the YouTube channel. We have been making analysis on this coin, and we are saying that the overall trend of this coin is an uptrend, and we expect it to reverse to go back to the upward side. And if it is to go back the upward side, what should we look for? That's what we have been looking at. So our analysis has based in the 4 hours. We have gone into 1 hour, the 15 minutes, and we confirmed the trend in 15 minutes or 5 minutes. So what we have just seen is just a price confirmation. You understand? It is just a price confirmation to confirm the trend. Whether the trend is going up, that the trend is going up or the trend is going down. You understand? You make a what? You make a confirmation. Now, and when you come to the 15 minutes, you can see what is happening. Okay? When you come to the what? When you come to the 15 minutes time frame, you can see that there is, you can see in the 15 minutes time frame, what we are looking at, we want every analysis to make. We want every analysis we make to be within our what? To be within our super trade. We just need to choose a super trade. You understand? Because you can see that this area you see here, the area you see here up, this was a retracement area on the Fibonacci, 61% area. The one you see down is a demand zone in 1 hour. All right. Now, this is the 15 minutes. In the 15 minutes, we haven't got any confirmation for us to enter the market. What is the confirmation? Because we are buying the market. If you want to buy the market, or we want to buy the market, we want to buy. What confirmation should we look at in the 15 minutes? Can you give me some of the confirmations? If according to the candlestick patterns that we saw, according to the candlestick patterns that we saw, after seeing all of that, which confirmation should we wait around this area for us to enter the market? Can you give me the answers in the chat? Which price patterns should we look at? You can now have joined, but I'm alert. Yes, we are streaming live onto the YouTube channel. Okay, which tool do we use to draw the zones? The zones and drawing the zones, you just tap on this pencil. Tap on this pencil here. When you draw the zones, you tap on this pencil here. Are you seeing the pencil? This one here? Tap on the pencil. And when you tap on the pencil like this, when you tap on the pencil like this, come and choose any tool that you want. The tools are here, very many of them. Okay, very many of them. And these are all tools, and all these tools are free of charge. How many of them do you use in trading if they are free of charge? How many of them do you use in trading view? How many of them do you use? So for example, you want to add this array, longer press on it, add it to favorite. When you add it to favorites, it will place itself here. It is here. You understand? For example, I want to add the head and shoulder. I want to add the head and shoulder. All I want to add, let me add, I can say, let me add the arrow marker. Okay. Let me add let me add the circle. I longer press on the circle like this. I tap on the star and it makes to favorites. When it's added to favorites, when you open the chart, it puts itself nearer here. You understand? It puts itself nearer there. You understand? And when you put it in the chart like that, when you put them in the chart like this, the moment you want to trade, they will appear here. These are the ones you are seeing here. They will appear here. You understand? They will appear here. And they will appear there. And if you don't want them to appear there, you can even come here. If you don't want them to appear there, you can come here and untick this. Show on the chart. You just untick like that, and they will go. Simple. When you tap like that, they will do what? They will go. So when they will go out of the chart, you will no longer see them. And if you want them, you tap on here. You scroll here and it says show on the chart. Tap on here, show on the chart. They will bring themselves there, and they will come here. You understand? If you want to remove them, they are disturbing you. Come here, tap again here, and remove them. Simple. Come and remove them. So the things that you see there. Okay, yes, somebody saying we shall look at the bullish engulfing. Thank you very much. We shall also look at the bullish harami. Thank you very much. Can you give us more candlestick chart patterns that can help us confirm a trend for us to enter the market? One of them is the bullish engulfing. Number 2 is the bullish harami. Give us another one. Give us another one. Give us another one. Yes, the doji. Which doji? Because the dojis are 2. Which doji is it? Which doji is it? If we are to buy the market and are looking for confirmation, and our confirmation should be based on the candlestick, or should be based on the candlestick chart pattern. Which chart pattern should we look at if we are to buy the market? The tweezer bottom. Thank you very much. The continuation candle. Which continuation candle? Morning star. Thank you very much. Tweezer top. Thank you very much. Bullish harami. Thank you very much. Dragonfly doji. Thank you very much. 3 white soldiers. Thank you very much. Wow. People are understanding things. People are understanding what? People are understanding things. Now, so when you come to the lower time frame, we look at the chart patterns for us to make an entry in the market. Now, here we are. Are you seeing, say, We shall wait for a confirmation. Okay, we shall wait for the what? For the confirmation. And I can even wait, and I say, if price confirms, I want it to be out of this fair value gap. I want price to go out of this fair value gap. Okay, I want price to go out of the fair value gap to avoid the noise. Then I will come here and I take my uptrend. You understand? That is price continuation. Price is continuing, but it has made just a retracement. So gwazereti twatandise dda mu 4 hours. We started in 4 hours, and when we started in 4 hours, we found where price made its high, which we called the swing high, and we labeled it there. We also came and we labeled where price made the swing low, and we tapped also here. We get ahead and found the demand zone, and here it is. Okay, no, the swing, yes, that's the demand zone. Okay, this is the demand zone, and this is also demand zone. So most of the time, you can, if you are trading in demand zones, once you see that price has made a demand zone here, it goes here. When it comes back, you wait for it to tap into the demand zone. You buy again. You go with the trend. You understand? Now, also drew the supply zone, and we labeled it there. We went ahead and looked at where price was resisted. Where was price resisted? Where was price resisted? Okay, where was price resisted? And price resistance, we say price was coming here, it was resisted around here, resisted here, resisted here, resisted here, resisted here, and resisted here. And we called these lines that we drew on this trend minor resistances. We called them minor resistances. Minor resistances. Also came here, and we saw that when price reached this demand zone, it had to go back down. It was supported here, supported here, supported here, and it is about to be supported here. And we call all of these minor support levels. Minor support levels. Minor support levels. Okay? Minor support levels. And we say that if price comes and doesn't respect this area here, comes and breaks through here and continues the downward side, it will have changed the character. And it will have shown that the trend of the upward trend has changed. Now we are going down the downward trend. Okay. Now, let me look at this. There's something I wanted to look at. Let me bring this injective coin. If support and resistance is disturbing you, let me take you through here. I want a coin where there is not any analysis. Which coin was it? Where is this coin going? I'm tired of making money on this coin. You see, since here, I've been making money till this. Tired of making money on this coin. Just wanted it to short it. But if I short it, it will show me 5. You understand? If I short this coin, because I entered around here. Remember, I wanted it to short it. And it showed me it cannot be shorted. Understand? So I entered around that area here, took profit under there, 39%. But I risk very small for such pumping coins. Risk what you can afford to lose on such pumping coins. You understand? Because here I thought you could touch this area. I thought, but this may be just a retracement. Let me see what is happening in the 3 minutes. I've not told you to trade this coin. However, I've been trading it. But I've not told you to go and trade it. Don't trade it because it can show you fire. It can show you fire. This is a trade. It is still an upward trend. And it has a lot of volatility. A lot of volatility. The coin is volatile. The coin is moving. Now, there is something that I wanted to learn about. For example, when I talk about support and resistance, let me remove this indicator. Let me remove this one also. Now talk about support and resistance. Let me go to 1 day. Let me go to 1 day. And this coin looks like a scam. Let me see. Okay, it is not a scam. Now, let me go to 1 week. Let me extend to 1 day. I'm extending it to 1 day. Now, if we are in 1 day, so I can't talk about support and resistance, and I don't talk about time frames. Now, 1 day, 1 day, 1 day, give us 24 hours. Do you understand? 1 day gives us 24 hours. And if you look at 4 hours, now, let's say that 1 day gives us 24 hours. All right. Now, let's draw support and resistance on 1 day candle. When you talk about the 1 day candle, this is our 1 day candle. Whenever we put here 1 day, it means whatever candle you see on the chart is made up of 24 hours, and it is a 1 day candle. Let's take an example of 1 day candle. For example, this one. Okay, let's take support and resistance on that one candle. Okay, let's take support and resistance on that candle. Okay, let's draw the support and resistance on this one candle. It is one candle, and it is one candle of 24 hours. It is one candle of 24 hours. It is one candle of 24 hours. It is 1 day that is equaling to the 24 hours. Okay, now let's draw support and resistance on that one candle. This is our support. Support on the week. Support on the week. Then bring and tap here. That is the resistance. Tap it away. All right. That is our one candle. And this candle is a green candle. It is a bullish candle. And I told you, if you don't know the parts of the candle, you will not draw the support and resistance, because when you look at this candle, we have the candle, we said that the candlestick has parts. It has the body, this one. It has the open. It has the close. It has the upper wick. It has the lower wick. It has the lower wick. It has the low. And it has the high. That is our candlestick. And it is a 1 day candlestick. It is a 1 day candlestick. When we change the time frame and we take the 1 day candlestick to 4 hours, since 1 day gives us 24 hours, when we try to take this in 4 hours, we shall get 24 divided by 4, which will be 6. It means we shall get 6 candles, but each candle will be of 4 hours. Let's take the chart in 1 day, in 4 hours, like this. When you take the chart to 4 hours, this was our low, this was our high. You understand? And we expect six candles. And each candle, we expect 6 candles. And each candle will be 4 hours. Let's count them. Where our line started, this is number 1. Where our line started, this is number 1. number 2, number 3, number 4, number 5, and number 6. So our full day started there, and the day stopped here. This is our range in one day. This is our range in 4 hours, but equivalent to 1 day. You understand? It means if you draw support and resistance on one candle, you have drawn support and resistance on 6 candles. On 6 candles of 4 hours. Give me one in the chat if the point is taken home. Just give me one in the chat if the point is home. Give me one in the chat if the point is home. Give me one. Type 1 in the chat. Type 1 in the chat if the point is home. Gitao, what's wrong with Gitao? Give me one in the chat. The point is taken home. And give me 2 if you have not understood. I will repeat for you. Give me 1 in the chat if you have understood. And give me 2. And give me 2 if you have not understood. Give me 1 in the chat if you have understood. And give me 2 if you have not understood. Give me 2 if you have not understood. Now, only 2 people have not understood. Now, they have not understood. Let me do it here. And again. Okay? Now, 1 day, 1 month, 1 month has 12 years, has 12. 1 month has 30 days. Sorry. 1 month, it has 30 days. Okay? And 1 day has 24 hours. Okay? And 1 hour has 60 minutes. 1 hour has 60 minutes. Whereas 1 minute will always give us 1 minute, will always give us 60 seconds. You understand? Do we all understand this? Do we all understand that? Do we all understand that? Give me 1 in the chat. Do we all understand that? Do we all understand that? Do we all understand that? Do we agree? Give me 1 if we agree. Give me 1 if we agree. Give me 1 if we agree. Now, if we agree with that, why don't we agree that these are candles? Now, we are agreeing that now these are candles. Let's also, if you agree here, let's also agree that when we look at candles, let's agree that now we have candles this time around. We have candles, okay? And we carve candles, a candle of 1 day. It has 24 candles of 1 hour. A candle of 1 day. If a candle is of 1 day, it means each candle you saw in the chart is 1 day. And it is equaling 24 hours. It means 1 candle of 1 day has 24 candles of 1 hour. If this is 1 candle, if this is 1 candle, if this is 1 candle, this is 1 candlestick. This is 1 candlestick. And this 1 candlestick was made in 1 day. It took it 1 day to form. When we change it a chart and we take it to 1 hour, we shall have 24 candles of 1 hour. We shall have 24 candles. We shall have this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, up to 24. You understand? This is what I've been showing you on the chart. This is what I've been showing you on the chart. That if this is if this candle is of one day, and we drew the high and the low, that is the high. And this one is the low. And that one is the low. When we take this to 4 hours, we shall have 6 candles within the middle. And when we take it to 1 day, when we take it to 1 hour, we shall have 24 candles. We shall have 24 candles of 1 hour within the same time range. Within the same time range, we shall have 24 candles. We shall have 24 candles between the high and the low of the one candle. I don't know whether I can, let me see whether I can do it well here. I wanted to replay the chat, but maybe it will not allow because this is not a paid version. Okay. Now that's what we have been talking about. If this candle is of 1 day, this candle is of 1 day. When we take it to 4 hours, it will give us 6 candles because we have lowered the time frame. Olunaku lumu 1 day. Sorry. Olunaku lumu 1 day. Lulimu essaawa 24. Nti singa tuba ne kande emu eyawanudde, egenda towards candles 24 eza 1 hour. You understand? But when we lower the time frame, tugenda ku time frame, netwambuka ku time frame ya 4 hours. It means for us to get the candlesticks in the time frame of 4 hours, we shall just get this 24, which is a full day, divided by 4 hours. And we shall get 6 candles. So we shall have 6 candles in the 4 hour time frame. Simple. You understand? Wetuberera ne candlestick emu. Candlestick emu mu 1 day. Bwe tuyingira mu 4 hour time frame, tugenda kubeera ne candlestick 6. Akitegeera? Bwe tuyingira mu 3 hour time frame, tugenda kubeera ne candles 8. Bwe tuyingira mu 2 hour time frame, tugenda kubeera ne 12 hour, tugenda kubeera ne candles 12. Bwe tuyingira mu 1 hour time frame, tugenda kubeera ne candles 24. Simple. Bwe tubeera mu 1 day time frame, tujja kulaba kande mu chart eya 1 day. Bwe tuyingira mu 4 hours, tugenda kulaba candles eza buli candle gye tugenda okulaba egenda kubeera ya 4 hour. Kitegeeza tugenda kulaba candle 6. Bwe tuyingira mu 3 hours, buli candle gye tulaba ku chart egenda kubeera ya 3 hours. Kitegeeza kyagitwalidde essaawa 3 okufoominga. Tugenda kubanga tulako candles 8. Simple. And the logic is easy. 24 divided by 4, 6. 24 divided by 3, 8. 24 divided by 2, 12. 24 divided by 1, 24. Simple. Oba mubitegedde bulungi. Bwe tubeera mu 1 day time frame, buli candlestick gy'olaba egenda kubeera ya 1 day. Naye 1 day erimu 24 hours. Bwe tuyingira mu lower time frame eya 4 hour, buli candlestick gy'ojja okulaba ku chart ejja kubeera ya 4 hour. Tugenda kubeera mu ne candles meka? Tugenda kubeera ne candles 6 okuweza olunaku lwa 24. Bwe tuyingira mu time frame ya 3 hour, kitegeeza buli candle gy'olaba kyagitwalidde essaawa 3 okufoominga. Kitegeeza Essaawa 3 bwe ziba nga zatwaliddwa okuforminga ate nga twakozesa ssaawa 24 we shall have 8 candles. Bwe tuyingira mu 2 hour buli candlestick yojja okulaba ku chart ejja kuba nga kyagitwalidde 2 hours okuforminga. Kyagitwalidde 2 hours okuforminga. Ate twalabye ng'olunaku lulamba lumu essaawa 24. So 24 divided by 212. Bwe tugenda mu 1 hour time frame buli candlestick gy'olaba egenda kubeeramu 1 hour oba kyagitwalidde 1 hour to form. So 24 hours divide by this 1 hour, we shall get 24. So we shall have 24 candles of 1 hour in one day. Simple. Unless bane bw'oba tobitegedde gwapa ku magezi. Oba mubitegedde tugendera awo atabitegedde yagenda okufa ku magezi engeri gye mba mbimusomesaamu. Unless you have any question. Nkimanyi time frames zibasumbwa. But time frames, simple mathematics. Just understand, one day has 24 hours. But when you see, all market and people are chopped in the market, they don't want to attend the classes. Now, yesterday we are 30 here. Now we are 19. A drop of around 11 people out of that call. But I tell you, whenever the market cuts your leg, just know we are learning. And that is the very time we should be coming to class all the time. You should be attending the class all the time. I say here. Yes, we are here. Unless you have not understood. If you have not understood the time frame, give me one. Give me one in the chat. What will we take a day? Give me one. I will read the must be take a day time frame. Give me one in the chat. What we take a day? Give me 5. If you have understood, give me 5 in the chat. If you have not understood, give me 1. If you have understood, give me 5. If you have not understood, give me 1. Hope now people have understood. Tomorrow, we are going to look at how to trade those chart patterns at support and resistance. Tugenda kutunuulira. Wetuba nga twalabye bullish engulfing button nebeera bweti. Wetuba nga twalabye bearish engulfing button nebeera bweti. When should we enter the market using this pattern? And which time frame is better? So we shall look at all of them. So to come prepared to see the entry points in the market. Allow me stop here. Repeat for me how to draw rectangles or writing in the chart. You people, you are going to see that on the YouTube channel. I'm going to call that on the YouTube channel. Twagambye jangu wano o tapping. Twagambye jja wano no tapping amweno pencil. No longer that. No longer she. No longer you that. Tap on that. Tap on this rectangle. Come here. Come here and draw it like this. Tap on the chart, VJO. Double tap on it. Double tap on it. It will give you an option. Okay. Double tap on it and it will give you an option of style. How do you want it to be? Do you want to extend it right and left? So if you want to extend it right and left, you tap on them all. If you want to extend it right only, you tap on right. If you want it to extend right, you tap on right, left, and left, right. You understand? Do you want it to be in the middle? You tap there. Okay. Do you want a background? You tap there. If you want the background. So you can, if you're on text, write the word here. That I can write and say demand zone, whatsoever you write. Tap on demand zone. You say okay. Okay. Don't forget to renew with our team, the Crypto Pioneers. If your robot gets expired and you need to renew, please come and renew with us. Be under our team and come into my inbox and I will give you the link. PBDMY. Use PBDM1 when you are renewing your bot and be under the Pioneers team. Allow me stop here unless you have anything to say. Okay, now let's stop the point is home. That's how we draw it, the support, resistance. We are going to learn a lot of things. Make sure that you just come to class, pay maximum attention, and when we learn like this, you go and make a practice. Yes, unless you have any question, allow me to stop here. I have a live at 11 o'clock. Please come in plenty. Let's respect this lesson. When you go into floating loss, it is just a tuition to pay. You are just paying a tuition. Those that are using leverage trading, take 1% leverage. Take 1% leverage, rally with that trend. You will enjoy the market. Okay? Double up use the double up strategy. Use the 1% strategy. It works better in futures trading. Unless you have any question, allow me to stop here. I wish you well. Thank you for attending these classes. Thank you for attending these classes. Unless you have any question. Do you have any question, people? Don't forget to renew. Most people, your bots are expiring. Please renew with our team and let our team grow. We are here to stay. We are here to stay. I will not bring anything that will distract you. Okay. I just want you to benefit from the bull market. Feel free to ask where you don't understand. I'm available. You can come to my inbox and tell me, Professor, this area is disturbing. When you are going to teach, please talk about this. I'll talk about it. You understand? Hey. If you feel you want to ask any question, please raise up your arm. Raise your arm. I told you, tap on the reaction. Tap on the reaction like this. After tapping the reaction, tap on raise hand like this. I will be showing your hand, and I will give you the opportunity to open your mic and say out something. Okay? I'm available. I'm available. Come to my inbox and tell me, Professor, when you come to teach, please talk about this. When you come to teach, please talk about this. I don't understand this area. Talk about this area such that I get to understand it better. All right. I wish you well. I wish you a good night. It is 10:30, and we said let this lesson be 10:30 because we don't want to do what? I wait what? What should I wait for? Why should I wait for? Yes, let's stop here. The meeting has been live onto the YouTube channel. If you have not understood and if you're not here, please go there and look into the YouTube channel and find ways of getting it through. Tugenda kufuna yo sessions as a discussion. I will not teach, we shall just discuss. You understand? There's some sessions are going to call out where we shall just discuss. We give ourselves notes, we say let's talk about this. When we talk about this, let's talk about this. When we talk about this, we give ourselves work. Let's discuss this. We come here, we make a discussion. You understand? Allow us stop here. Madam, the difference between engulfing and haram somehow confused. Now, if you're still here, bullish engulfing. For example, bullish engulfing. Okay? Bullish engulfing. This is a bullish engulfing. That is a bullish engulfing. Okay? When we talk about bearish engulfing, you find out that this one is a big candle indicating a downtrend, and this one is a small candle like this. So here we are. This one is bearish engulfing. This one is bullish engulfing. When you talk about the harami, the inside bar, for example, this one is like this. Then this one is like this here, and it will lead the bearish harami will lead it to the market to go down. You understand? It's a candlestick. Where did I get the what is the importance of this? This. No, those are what I've brought the engulfings. Now, let me talk about the what? The harami. sorry, let me tap there. Harami, bullish harami, and bearish harami. A harami means an inside bar. An inside bar chart pattern. A harami means a what? An inside bar. Now, most of the time, you'll find out the harami like this. This is a bearish harami. It will always lead to the downward trend. You see that the candle is small, but it will always lead to the downward trend. Most of the time, they are at the same level. These ones, they are at the same level. The same applies to the bullish harami. This one comes like this. Stronger candle. Stronger candle. It will be a stronger candle. It will be a stronger candle like this. Then, being a stronger candle, come here and put this one here, like this. You understand? They are at the same line. So this one will leave the market to go down. This one will leave the market to go up. This is a bullish harami. This is a bearish harami. You understand? That's the difference between the two. Allow me to stop here. I wish you well. Your bots are expiring. Please remember to renew with our team, the Crypto Pioneers 256. Use the PBTMY. So it is a small and big, but same line tweezers. Thank you very much. The tweezers are of the same size. The tweezers are of the same sizes. You understand? So you find that these ones, they are at the same line, but they are different size. That's the difference between them and the tweezer. That's the difference between them and the tweezers. 25, 2.34%, 56. How would you set it in board? What do you mean? 25, 2.34. Yusuf Kyle, I've not understood your question. Maybe you will come to my inbox and we sort it out. Allow me to stop here. It is already 10:30, and we agreed to spend 1.5 hours. Yeah.